Good afternoon, everyone. This is Henry with Simpler Trading, and in tonight's free video, I wanted to focus on SPX. As we get into the witching expiration, that'll be Friday, March 18th. That does wrap up the single stock futures, equity futures, etc. So as you get into these moments in time, the options market can really have some nuanced tendencies. And if you're kind of scratching your head, wondering where the rally of the last 3 days has come from, it is primarily that there were so many puts that had been opened, right? Between the global economic situation, headlines, etc. It's a really tricky spot for the markets, and there was a lot of fear out of there, a lot of puts being purchased. And once those were all, basically once the majority of participants were short, the market had nothing to do but rally. Now, a lot of those short duration SPX put options will expire and have been crushed, and into next week, I think opened up the door for a little bit of a downdraft, right? Now that a lot of the hedging is expired, you may leave yourself open to a little bit of volatility. Remember, that's not something that's uncommon after witching, and especially you can do it on monthly witching. We've seen this in January. You've seen it in previous years where that movement after your expiration can be so volatile. So what I want to get down to is basically saying that is what's driven the past 3 days into Friday, and for the actual expiration, they're probably going to try to pin it or to have it close in the final moments of the day at 4,400, because then everyone with the $4,400 calls, everyone with the $4,400 puts, they will all be worthless, and we could see price kind of come to a head from there. Then, what I want to keep an eye out for, and this is a little bit of predicting, which you want to be very careful in doing in the markets. You mostly just want to follow what's happening rather than lay out your intentions, right? But at the same time, the roadmap that I'm working with is we'll get through that witching expiration. We'll see if we get the pin or not. And then any weakness over the next several sessions coming back into, now we're above this 21 EMA. It started to make this little hook higher. So as we sell off and come into the 21 EMA, if you can hold support, I think you watch for the quarterly. Now remember, we've just talked about the witching expiration, but there is also this spot in SPX where you've got options that are going to expire on March 31st. So when we look at this quarterly expiration, I like the idea of looking at a $4,500 butterfly. Now, how you go about the exact structure is open to discussion. There are a few ways to do it. If you just wanted a black and white advice, I think the 50 wide makes sense here. Now, if you can get this on a pullback, that would really be the way to do it. So I'm not putting this on Friday. I have to see how we act next week, right? So it's really going to be a timing thing, but I just want you to carry forward kind of the highlight of the video is that when that final day, the 31st, rolls around, proximity to 4,500 seems like a fair bet, and using strategies like butterflies can really help put risk reward in your favor. So you guys make note of that, kind of keep it with you for the next couple of weeks, and then we'll come back to it and see how well it works. So have a great rest of your evening, and we'll see you in the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.